Okay, good morning, everyone. Looking at the US stock market, the Dow has again recovered from the 21,750 points level. Since then, we are seeing a continuous buying interest on the Dow Jones as the Dow formed the high low formation. Recently, it staged the breakout pullback just towards the 25,000 or the EMA 120, and the continuation pattern was established as the Dow was powered above the 26,000 psychological level on last Friday. With the breakout above the 26,000 psychological level, we could expect the Dow to creep higher towards its next resistance, located towards the 26,300, or even back towards the previous all-time high of the 27,000 psychological level. In the meantime, the 25,500 points will serve as the immediate support level for now. The gains on the Dow Jones on last Friday was mainly underpinned by the optimism over the US and China trade talks. Similarly, on the S&P 500, we are seeing the S&P 500 continues to trend higher following the recovery above the 2350. Since then, the S&P 500 has formed the breakout to pull back just towards the EMA 120 or the 2700, and the continuation pattern was recently established as the S&P 500 closed just marginally below the 2800 psychological level. On the S&P 500 rise, let's monitor for the breakout above the 2800. Should there be a breakout above that, we could expect for the upside for the S&P 500 to trend towards the 28 of 60 or even towards the previous peak of the 2940 level. In the meantime, the 2750 will serve as the immediate support level for now. With some updates on the crude prices, the crude prices continues to inch higher after the healthy consolidation from the 51 towards the 55. We are seeing earlier a healthy consolidation on the crude prices between these two bands, but subsequently we are seeing the crude prices has staged another wave of a rally. And since the breakout above the 55, we are also seeing the flow-through buy interest was noted on the crude prices. For the crude prices right now, you can expect for the upside for the crude prices to creep towards this next resistance, which is located towards the 60 or even towards the 63 US per barrel mark. In the meantime, the 55 will serve as the immediate support level for now. All in all, the crude prices has seen some of the strong recovery trend as it is forming the higher high and also the higher low formation throughout the past 1.5 months trading period. Okay, some of this on our local front. The FMKRCI has again been consolidating between the 1665 towards the 1700 psychological level. With the breakout beyond the 1700 recently, we are seeing the follow-through buy interest was noted as well. But on last Friday, we are seeing profit-taking activities on the FMKRCI. This could be a healthy profit-taking activities as we are seeing earlier after 4 days of gain, which is close to about 40 points of gains, continuous gains. A pullback will be a healthy one for investors to digest their recent gains before the next recovery to resume. Tracking the gains in the Wall Street overnight, we could expect some of the gap formation, at least for today, on the FMKRCI to retest the 1740 level over the near-term period. In the meantime, the 1700 will serve as the immediate support level for now. On the FM's market rise, we are seeing the FM's market index has earlier breached above the 12,280 points level. Since then, the lower liners continues to see the rotational play as buying interest continues to dominate on the lower liners, as the FM's market index continues to trend higher towards the 13,000 psychological level. But on last Friday, we are seeing just some more profit-taking activities on the low liners. So for now, we could expect some of the sideways movement over the near term for investors to digest their recent gains before the next recovery to resume towards the 13,600 points level. On stocks wise, we can watch out firstly for CCM. CCM has earlier recovered from the recent low of around the 1 ringgit and 55 cents level. Since then, we are seeing a healthy recovery on the CCM towards the 2 ringgit and 15 cents. Price subsequently staged a pullback, but it just pulled back towards the ringgit and 63 cents level, forming the higher low formation above the 1 ringgit and 55 cents, and subsequently traded on a sideways manner. And recently, we are also seeing CCM has formed the bullish engulfing candle on last Friday, accompanied by some of the improvement in volumes being traded. For CCM right now, we are also seeing the short-term triangle formation breakout as price from the bullish engulfing candle. We are also seeing the price stage the short-term triangle formation breakout above the 1 ringgit 93 cents. With the breakout above the 193, we could expect price to head higher towards the 2 ringgit and 3 cents or even towards the previous peak of 215. Stop loss will be located below the 1 ringgit and 85 cents level on a CCM. Should there be a follow-through buy interest beyond this symmetrical triangle formation breakout, we could expect the MACD indicator to shoot a buy signal. The RSI could be strengthening its position above the 50 level as well. On our revenue group, it is a new IPO since the mid of last year. He has done very well following these IPO days towards the 1 ringgit and 46 cents all-time high. After hitting the 1 ringgit and 46 cents, we are seeing a healthy pullback on our revenue group as price staged a sharp pullback towards the 1 ringgit and 7 cents, forming a hammer candle on top of that. Subsequently, we are seeing the recovery trend on revenue group as price from the higher high and also the higher low formation over the past 1.5 months trading period. On our revenue group right now, we are also seeing this consolidation breakout above the 1 ringgit and 28 cents level on revenue group. With the breakout above the 128, we could expect price to head higher towards the 135 or even back towards the previous peak of 146. Stop loss is below the 1 ringgit and 22 cents level on revenue group. On our media premium, price is still on the pullback phase, but recently we are seeing some very strong recovery trend after price has formed the hammer candle on top of the 32.5 cents level. Price has been traded on a sideways manner before forming the first breakout above the 39 cents. With the breakout above the 39 cents level, price has been consolidating between the 39 towards the 42 cents level over the past 3 weeks trading period before forming the breakout above the 42 cents level on last Friday, accompanied by some of the climatic volumes being traded. With the breakout above the 42 cents level, we could expect price to stage further recovery towards the 45.5 or even towards the 49 cents. Stop loss below the 39 cents level on media premium. Things appears to be very positive on media premium right now. As you can see that it earlier from the bullish divergence signal. Since then, we are confirming the recovery trend on media premium as price from the high low formation. The indicator continues to follow suit as well. Last two company for the day, firstly will be Aeon. Aeon is still on a pullback phase, so any recovery from now will be just taken as a technical rebound play. Aeon has then retraced towards the 1 ringgit and 38 cents level before forming the mild technical rebound. The recovery, however, was short-lived towards the EMA 60, which is around the 1 ringgit and 58 or 59 cents level. If subsequently stage a reversal pattern, it formed the bearish candle on the next day after forming the dodgy candle. Subsequently, the price has staged a pullback. The pullback was healthy as well towards the 1 ringgit 51 cents level. As we can see that during this pullback phase, we did not see much of the heavy selling pressure, but recently we are seeing some recovery pattern was noted on the Aeon, accompanied by some of the improvement in volumes over the past 3 to 4 trading days as well, as price once again retested the 1 ringgit 59 cents, but it did not close above that. For now, let's monitor for the breakout above the 159. Should price breach above the 159, we could expect price to see further recovery towards the 170 or even towards the 1 ringgit and 79 cents. Stop loss below the 151 level on Aeon. Last company for today will be Focus Lumber. Focus Lumber has been on a very strong uptrend in type formation as price continues to form the higher high and also the higher low formation throughout this period of time. With price hitting the recent peak of the 1 ringgit and 87 cents level, price has recently staged a healthy pullback just towards the EMA 120, which is around the 1 ringgit and 70 cents level. It formed a hammer candle on top of the 1 ringgit and 70 cents level on last Friday with some of the bullish candle. being formed. It also snapped the 5 consecutive days of pullback. So for now, this could be taken as the breakout, pullback, and the potential continuation pattern to. But before that, let's monitor to see if there's any follow through by interest beyond yesterday last Friday's high of 176. Should price manage to breach above the 176 level today, then this could confirm the breakout, pullback, and the continuation pattern for price to trend towards the 187 or even towards the 2 ringgit psychological level. Stop loss will be located below the 170, and if you can take further risk, final defense will be located below the previous gap formation, which is located towards the 164. If you have any questions, you can put in the chat box. I'll reply you shortly. Question here firstly on Dayang. Dayang has recently formed the uptrend inter-orientation formation after the EMA 9 is above 20, 60, and 120 has been in line. Before that, we are seeing Dayang has formed the strong base or strong support along the 50.5 cents level. It subsequently formed the breakout above the 63 cents. With the breakout above the 63 cents, price continues to head higher, being supported above the EMA 9 level towards the 88 cents level intraday high before forming the bearish engulfing candle. But with the bearish engulfing candle being formed, we did not see follow through selling pressure on last Friday, and instead price formed staged just a mild rebound. So for Dayang right now, this could be the after a long stretch of a rally upon the breakout of 63 cents, this could be the healthy breakout, the sideways movement, and the potential continuation pattern that we are expecting. Firstly, Dayang could trend towards the 88 cents. That will be the immediate target price for now. Upon the breakout of 88 cents, we could expect further upside for Dayang towards the 96.5 cents level. Stop loss will be located below the 78.5 cents, which is currently located at the EMA 9 level. So for now, we could expect this a sideways manner until price manage to break above the 88 cents. Only we can confirm for the next recovery on Dayang. Gains will likely to be limited towards the 88 cents level for now. On our Rand Hill continues to see a very strong recovery trend towards the 152 level. Since the breakout above this 76.5 cents level, price continues to form the staircase formation from the higher high and also the higher low formation being supported above the EMA 60. After hitting the recent peak of around the 132 or 133, price has recently staged a healthy pullback and subsequently traded on a sideways manner. So for now, it could be traded on a similar manner. After a very strong rally, a 2-day rally towards the 152, price has staged a healthy pullback before trading on a sideways manner. And if price can find some base along the EMA 9 or EMA 20 level, then we could expect price to head for further recovery towards the 152 or even towards the new high, which is located towards the 160 level. So the immediate target price is located towards the 152 towards the 160. Stop loss below the EMA 9 at the 133 cents level on a Rand Hill. Despite this pullback over the past 2-3 days, we take this as a healthy pullback because there's not much of the heavy selling pressure compared to the earlier part of the rally phase. So this formation could be flushing out most of the contra players. So most of the genuine holders are still in position on a Rand Hill right now. Similarly, like previously, after a long stretch of rally with high volumes, price pullback without significant volumes, traded on a sideways manner before the next recovery to resume. So it could be traded on a similar manner as well. If there's no further question for today, that will end the morning briefing. Thank you.